Good morning, everybody, and welcome to the two things. Okay, let's start our morning volatility report with this. Two things most like Bigfoot: Twitter buyout and Fed rate increases. Welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer, OptionPick.com, welcoming you. Weekly course next Saturday. If you're an OptionPit Gold member, OptionPit Live member or above, you get it for free. We do 12 Saturday courses a year. Our clients like them. They're well attended, and you learn something. And if you don't learn something, we give you your money back. How can you lose? And with that, we got a little buzz with Twitter this morning on the what I could only see as it looks like pretty good news. One thing I'm noting is the vol is back down here in the back a little more. Kind of typical, let's just call it go into takeover action. They are reducing the leap vol, meaning the acquiring company, if it's a stock deal, you're looking at a lower acquired volatility. Who knows? But, it's also a good opportunity to maybe trim a position or something if you have one. The second piece of news is Facebook. I'm not quite sure what is up with that. We can see if we can find a trade. The vol's up a little bit. They're saying they're underreporting something. I don't know, because you got the corporate scandals and the stocks go down. So we'll see how all that goes. This is another one, Mylan from the EpiPen. I don't know what Congress is going to do, but they've taken some heat from it. So it's kind of one of those things where they probably bounce, but you might want some kind of protective position overall. So we'll look at those things in our chat room today. Broader market stuff. Remember, yesterday we got probably, I'm not going to call it the low tick for VIX, but it was pretty low. We're back sort of to where we were prior to the whole, let's just call them the rate fracas, where, this is kind of about let's call it the high 11s. Hard for it to stay there very long. We even discussed, I think, possible put time spreads. And we'll see today how this goes. I'm not sure really how this is going to shake out. I think the big news really is just these futures are crazy, crazy expensive. I'd like to see if we can put an ARB together in our chat room today. Also with this little pop and vol, maybe even a butterfly in the SPX near the money, because we've kind of got the rally and it sort of died at this level. The market has kind of been living on monetary easing. The Fed now is kind of, I think, cleared a path for something, right? At least we don't have any noise to really worry about in the short term. So I think what does that bode for us? Now we need a reason to rally. So if there's less monetary machinations, we actually need something. We need growth. We need earnings. We need something to get things kind of juiced up again. We're not getting the huge rate lift that everybody might have thought, and you want to see the reason why. You still have, we're not at the kind of nosebleedy levels, but from the beginning of the year, right? All they've tried to do is raise rates or say they're going to raise rates, but that hasn't stopped anything. And again, just look at the cover of the Wall Street Journal. I mean, the U.S. is paying a positive rate, and other countries have negative ones. So it's, I still think that somehow all of the monetary policy easing will sort of come out of the market. Don't know quite how that will work. Maybe just the fact that governments own all the paper doesn't matter anymore. But as far as that goes, I think we need a push for higher equities, higher equity prices, and at least right now, until we see some big earnings or something like that, that kind of fast gap is gone. So where is their juice? I have to say, you got a little bit of pop here in vol on the down. Mostly it was oversold. I think the juice is in the vol futures. Put spreads in VIX, put calendars and VXX work. All those nothing has changed in that way because October volatility, October futures are still 15.5. They got very cheap. They dropped below 16 very fast, and without with the Fed basically saying we're not doing anything, it's hard to get a bid for Val. It could be the first October where it looks like an August. And I think that's about what we have. For this day, who knows where we end up with. And even I think just careful plays to fade using the fade the rally in the vol futures, just because since volatility has been dictated by the Fed and they're saying they're not doing anything, it's hard to come up with reasons to really want to own vol or own the vol products, let's say. And with that, I will see you all later.